Markus, thanks very much for joining us. Maybe just as an introduction, just give us, I suppose, an update on the company.
After 12 years of expanding and growing into the European investment market, we acquired two new markets, that is the Netherlands or the Benelux, as we see it on the bigger scale, and Sweden, also in the bigger scale. Scandinavia is our main office in Scandinavia. We still aim to be the European broker for real estate investments. And the success story of the last years did emphasize this wish. So for us, everything fine, even though the interest rates are rising, which is for most of our clients not a happy moment, but for the broker itself, not any trouble. In the end of the day, there is a lot of movement in the market, and we want to connect people through our database and through our possibility to take one real estate and bring it to another market where people probably wouldn't have even have thought about. We are specialized in people that invest or change money into bricks, the family offices, the funds, the high net worth individuals, and they became very eager to buy in other markets. We help them to go there and to find their way around, provide them with our expertise.
And you mentioned there, Markus, obviously the rise in interest rates. We've also seen geopolitics, the markets trying to recover from COVID. But I guess, how are you seeing particularly the European real estate investment market at the moment? Do you see there as being opportunities, a pause? How do you see that?
I think it's different from country to country. The general, let's say the general view on the investment markets would be that everybody is waiting now how the development in the next months when it comes to interest rates, the war, costs of construction, and so on will develop. I think there is a lot of, let's say, surprises waiting for us, or maybe not. We don't know yet. Nobody can predict the future at the moment. And even the people who dare doing this are very quiet right now, because I think we have a lot of variables on the market right now that could turn in all ways.
And Markus, there's a lot of focus at the moment, particularly in terms of resilience on the living sector. I guess, what are you seeing there? How are you seeing, because you're operating across Europe, so what are you seeing in markets across Europe, particularly in terms of, let's say, investor appetite, activity and opportunities in that residential side?
I think residential properties have proven in the last years or even the last decade that they're quite secure as an investment. That I would also say the rising interest rates do not harm them as other asset classes might be harmed. Has a very simple reason. The family funds, the high net worth individuals, they were aiming this asset class from the beginning on their way in the real estate market. And it's in Austria, we say you always live somewhere, or you have to live somewhere. And that's for somebody who is not a professional in real estate, therefore the easiest decision to buy, because if you have a good location, if you have good shaped apartments, the renters you will always have. So I don't think there will be a lot of effect on these asset classes, especially in the good locations. I do see troubles within the B and C locations that have been a bit overpriced in some countries and in some regions. So there will be a correction of the market, but I don't see a big gap down. I mean, in the end of the day, the most secure asset class is residential, and it always will be.
Yeah, it's really interesting to see how the residential and living sides, including things like student housing, senior living, those kinds of things have really come to the fore in terms of investor intentions. Thanks very much for joining us, Markus.
Thank you for having me.